Welcome to the 6th class. Fortunately, we are on the last lesson from chapter 1. By watching this lesson, you will finish this chapter and will get closer toward becoming a professional trader and investor. Don't forget to subscribe our channel now. Let's start our last lesson from this chapter, which is about the money. Before we start our today lesson, which is the last lesson from this chapter, let's have a quick look to our previous lesson. Lesson 1, History of the Money. Lesson 2, Gold Standard. Lesson 3, Bretton Woods and Nixon Shock. Lesson 4, Money in Modern Economy. Lesson 5, Types of Money. And our today lesson is Currency Code and Currency Pair in Forex. Our today lesson is a very important lesson. Please follow us until the end of this video. And in this lesson, we'll learn in detail about the currency code and currency pair in foreign exchange. I'm sure you have seen such types of board in the foreign exchange shops or any other places that they are exchanging the foreign currencies, like airports, hotels, supermarkets, or any other places if you have traveled outside the country. But the question is why the currency code has shown by 3 alphabetic letters. For instance, dollar USD, or in euro shows by EUR, or pound GBP. So why it shows by 3 letters and what these letters mean. So no worries, we will teach you the all in this lesson. Currency code. The currency code is ISO 4017-2015 standard that specifies the structure for a 3-letter alphabetic code and equivalent 3-digit numeric code for the representations of currencies. The currency code has specified by International Organization for Standardizations ISO in 1978. International Organization for Standardization ISO is a non-governmental organization that provides standards for manufacturing, commerce, technology, and communication. In 1973, ISO decided to be involved for providing a currency code for countries. After 5 years of collaborations and deliberation, the first standardized currency code were published in 1978, with a standard on how they should change. ISO 4217-2015 is intended for use in any application of trade, commerce, and banking, where currencies and funds are required to be described. It is designed to be equally suitable for manual users and for those employing automated systems, which processing algorithms could use numeric codes for more effective processing. What is ISO 3-letter alphabetic code and equivalent 3-digit numeric code for the representations of currencies? 1. The 3-letter alphabetic code. Currency alphabetic codes are composed of nations' 2 characters country code plus 3rd character signifying the monetary denominations. Currency code always shows with 3 alphabetic letter code, which the first 2 letters indicate the country code, and the last letter shows the money designator. Let me give you an example. Example 1. What is Canadian currency code? Canadian currency code is CAD. So what does it mean? CA indicates the country code, which is Canada. D is the money designator, means dollar. So CAD is Canadian dollars. Example 2. USD means United States dollars. US is the country code and D is the money designator from United States, which is dollar. Example 3. GBP is Great Britain pound. So all the currencies are showing with 3 alphabetic letters in the currency exchange and currency exchange platforms. If you want to have all the countries' currency code, so you can go to the ISO website and download the list from ISO website. So it is very easy. Now you understand what the currency code means. Second, ISO numeric codes. ISO 4217 has specified 3-digit numeric code to each country as well. This numeric code is usually the same as the numeric code assigned to the corresponding country by ISO 3166-1. The numeric code is basically used in a banking system with processing algorithm for more effective processing, and they are not using in the Forex platform or in the Forex market. They are only used by the banking system. Let me give you some example of the 3-digit numeric codes of currencies. For example, here, United States dollar, alphabetic code is USD and numeric code is 840. Or Australian dollar is, alphabetic code is AUD and numeric code is 036. Or Great Britain pound, alphabetic code is GBP and numeric code is 826. So alphabetic code is always used in the Forex platforms or at the Forex market when we are exchanging the currencies physically or through the platforms. But numeric code is used by the banking system, not in the Forex platforms. So all these codes are specified by ISO. X currencies, precious metals or supranational currencies. ISO 4217 has provided codes for supranational currencies such as precious metals and several things which are similar to currencies. X currency code always shows by 3 letters. The first letter, which is the X, indicates supranational or global currencies category. The last 2 letters shows precious metals or commodity money chemical symbol. The use of an initial letter X for this purpose is facilitated by ISO 3166 rule that no official country codes beginning with the X will ever be assigned. It is an international code. Let me give you some examples. Gold trading symbol is XAU. So X is ISO 3166 and AU is a gold chemical symbol. Second example. Silver trading symbol is XAG. X is ISO 3166 and AG is a silver chemical symbol. The other example is platinum trading symbol, which is XPT. X is ISO 3166 and PT is a platinum chemical symbol. So in the trading platform, always the gold shows by symbol of XAU. It's not written gold or any other code. This code has specified by ISO 4217. Silver in the trading platform shows by XAG, or platinum trading symbol is XPT, and many more other precious metals or supranational currencies. X currency units are denominated as a 1 troy ounce of the specified metal as opposed to USD or any other currencies. It means that when you see the price of gold, silver or any other precious metals on the trading platforms, that price indicates the 1 troy ounce unit of that precious metals. It is not 1 gram or kg or something else. It is 1 troy ounce, which is almost around 32 grams. In this Forex codes chart, you see the symbol of XAU and USD. So XAU, we previously have studied that it is from the supranational currencies code, that means gold-based dollar. Or in the second, you see XAG, so it means silver against the United States dollar. Or XPT, it's the platinum symbol base United States dollars, and the price is $1,039.35. Or the gold is $1,924 per ounce. And as we have discussed earlier, that the unit rates of these precious metals on the trading platform is always troy ounce. In the other chart, you see here EUR USD. So you already understand that EUR is a euro and USD is dollar. So euro vs dollar, or USD against JPY, Japanese yen, or pound vs US dollar. So the question here is, so now when the price in the code chart indicate that euro USD is 1.0866, so what does it mean? And also when you buy this pair in the Forex platform or when you are selling that in the Forex platform, what does it mean? What happened when you are buying or when you are selling any pair in the Forex platform? So stay with us and you will learn the all in this lesson, and it's very important lesson, especially if you are beginner. And also don't forget to subscribe our channel. And also here there might be one more question as well, that why in the Forex or trading platform always the euro is coming at the first and the dollar is the next, or why dollar is the first and Japanese is the next, or dollar is the first or pound is the first and dollar is the next. So why it's not like USD GBP, or not why it's not like USD euro? So why it's like that? All these questions also will be answered. ISO standards for currency exchange or Forex. ISO currency codes are central to currency pairs, which are quotation and pricing structure of currencies traded in the Forex market. The value of a currency is a rate is determined by its comparison to another currency. As we have discussed earlier, ISO currency code are 3-letter alphabetic code that represents the various currencies used throughout the world. But when they are combined in pairs, they make up the symbols and cross rate used in currency trading. For example, Euro USD. The euro which is come at the first, it is the base currency, and the USD which is come the next, it's code currency. This structure is not only for euro USD, it is for all currencies. Any currency which come the first instead of euro, so it's a base currency, and the second currency is always code currency, no matter which currencies come the first or the other is the next, but all follow this structure. The currency pair indicates how much of good currency is needed to purchase 1 unit of the base currency. Let me give you some more example. For instance, the price of Euro USD is 1.0866. This price means that 1 euro can be exchanged for 1.0866 US dollars. So when we are exchanging this price at the platform, they have some more meaning as well. If you sell or short this pair in Forex, it means you sell euro against dollar, or I have bought dollar. You should always keep in your mind, when traders they are talking that I short the euro USD, it means that you sell that price. You should understand about the term of short as well. When you hear that from any speculators or trader at the market, do not be confused. Or in another hand, if you buy or long this pair in Forex, it means you buy euro against dollar or have sold dollar. So here, as an example, we have choose the euro USD. So there is one other important thing that you should not forget, that these pairs in the Forex platform also is specified by ISO. You cannot bring the USD first as a base currency and you change the euro as a good currency. So all this is specified by ISO. So we cannot change that one. All the Forex platforms, always the euro will be the base and the USD is the code. Or in other pair like USD GPY, the USD will be the base and Japanese yen or GPY will be the code currency. So all the pairs that you are seeing in the Forex platform, they are specified by ISO. So now you also have learned that when you buy this pair or long this pair at the market, it means that you keep the base currency with you. If you sell or short the currency pair in the Forex platform, it means that you keep the code currency with you or sell the base currency. So it's very simple. So as a beginner trader, it is very necessary for you to know this part when you are buying any currency pair, what is happening, or when you are selling a currency pair in the Forex. Let me give you one more example. For example, if you think that the euro is going to be strong, so what you will do, you will buy the euro USD. Or if you think that the dollar is going to be strong, what you will do, you will sell this pair. Major and commodity currency pairs on the Forex. A. Major currency pairs on the Forex. 1. Euro USD. 2nd. USD GPY. 3rd. GBP USD. 4th. USD CHF. The term major currency pairs refer to the currencies that have the highest floating level and the largest volume of currency transaction in the market. The 4 major pairs are the most heavily traded currency pairs in the Forex market. These 4 major currency pairs are deliverable currencies and are part of the G10 currency group. While these currencies contribute a significant amount of volume related to economic transactions, they are also some of the most heavily traded pairs for speculative purposes. For instance, the Euro USD by far the most heavily traded currency pair in the world and is popular among speculators due to its large daily volume representing more than 20% of all Forex transactions. The 5 currencies that make up the major pairs, the US dollar, euro, Japanese yen, British pound, and Swiss franc, are all among the top 7 of the most traded currencies as of 2022. High volume means that traders can enter and exit the market with ease, with large position size. In lower volume pairs, it may become more difficult to sell or buy large positions without causing the price to move significantly. High volume resulting in a smaller chance of slippage or a smaller slippage when it does occur. It doesn't mean large slippage can happen in major pairs, but compared to exotic pairs can be minimal. When we are saying that major currencies are free floating, means that their prices are determined by supply and demand. Central banks may step in to control the price, but typically only when it is necessary to prevent the price from rising or falling so much that it could cause economic harm. Keep in mind, major currency pairs in the Forex market called by traders in other names as well. For instance, Euro USDs, Euro, USD GPYs, Gopher, GBP USDs, Cable, USD CHFs, Swissie. For instance, if any trader saying that I'm long in Cable, it means that he has bought GBP USD. Or if anyone saying that I'm short in Gopher, it means that he has sold the USD GPY. Or if you hear that some traders saying that I'm short in Euro, it means that he has sold the Euro USD. B. Commodity currency pairs on the Forex. 1. AUD USD, USD CAD, NZD USD. The reason that the traders calling these currencies commodity money is that mostly their prices at the market fluctuating as per the commodity prices. For instance, Australian dollars affected by geographical factors such as production of commodities, gold, coal, iron, copper, and many other minerals. So if the price of these commodities or goods going higher, so the Australian dollar value also will go higher. And also there are many more factors as well. It's not limited to this factor I have mentioned. So the Australia dollar value is not limited to this factor I have mentioned. And also the political factors or any other fundamental factors can also affect this currency value. But the mentioned commodity affect more compared to other factors. And also the business environment in China as a major customer for Australian community also could affect the Australian dollar value in the market. The other commodity currency is Canadian dollar. There is a high correlation between the value of Canadian dollar and oil price because Canadian economy is heavily reliant on oil export. Oil trading price dictated the health of the Canadian economy and the value of its currency. The third, New Zealand dollar. Agriculture is a major factor in the New Zealand economy. More than 2/3 of the exports are agricultural. One particular factor affecting the New Zealand dollar is the price of dairy. New Zealand is the world's biggest exporter of milk product. So if milk prices are on the rise, the New Zealand economy is likely to improve and traders may price up the currency in anticipation. So that's why these three pairs in the Forex called as a commodity currency as well, because their value is mostly affected by commodity price at the market. And also this currency in the Forex market has been called by traders in other name as well. The Australian dollar is United States dollars called OC, or USD CAD called Loonie, NZD USD called Kiwi. Thanks for watching this lesson, and by the end of this lesson, you have finished the chapter 1. Congratulations to you. Have a good time, and don't forget to subscribe our channel to do not miss the future lesson. And our future lesson is the second chapter, which is about the Forex.